Welcome back to another TradeAlts technical analysis tutorial. This is Ichimoku volume number 2, the long-awaited return to the series, where I'm going to teach you the optimal trade entries. Let's get started. So just a quick recap of Ichimoku video 1, basically just teaching you the basics. So talking to you about the cloud, Tenkan and Kijun, the relationship between the two, and so on and so forth. In this video, I'm going to really focus on what I call the optimal entry. And it's basically the most conservative way that I can think of using Ichimoku. And it consists of 4 important items that are needed. You can treat it like a checklist, basically. Any trade that's taken that's missing any of these 4 items, it will increase the odds of your trade ending in a loss. Basically, this is the most conservative way, again, that you can look to trade. And, again, you might not get the exact bottom, you might not get the exact top, which you're not going to really get that when you're trading using Ichimoku. But I think that this setup is really important for beginners to understand before you venture into the more advanced stuff. So let's get to it. So for an optimal long entry, number 1, the price should be above cloud. So that's very important. Basically, if price is above cloud, things are on the more bullish side than not, giving you a decent opportunity to take a long. The second thing that you need is you definitely need a bullish TK cross, so your Tenkan and Kijun. So I just write TK for short, but you need a bullish TK cross. The third thing is that the cloud itself should be bullish. Okay, so again, some different setups that we're going to go through later on in the series, you won't get that. There's going to be different ones. Like when we get to the edge-to-edge trade, for example, that's going to be a completely different method of trading. But for the optimal long entry, again, keep it as simple as possible. You want the cloud to be bullish. You want the cloud to be on the side of the trade that you're going to be taking. And then finally, which is a bit different than some of the, I've talked about previously, to complete the optimal long entry, you want Chiku span or your lagging span. Some people call it lagging span, just in case you were wondering. You want that to be not only above price, but above cloud as well. So you want, again, Chiku span to be above price and cloud. So those are the 4 conditions that you need for your optimal long entry, which we will give an example here shortly. I'll walk you through that. But before we do that, I'm going to move to what an optimal short entry looks like. And you guess it, it's going to be basically exactly what you see here, just flipped to the downside. So flip to the bearish side. So your optimal short entry, price should be below cloud. Again, typically if price is below cloud, that leans more bearish. So you would be looking for short entries most of the time. You need a bearish TK cross. Again, your Tenkan and Kijun should be bearishly crossed. Number 3, your cloud should be bearish, because you want your cloud, again, to support the trade that you're going to take. If you're looking for shorts, you want to optimally and be taking those shorts below cloud, because then price is obviously more bearish. And lastly, Chiku span should be below price and below cloud. So if you have all 4 of these conditions, then you could have a nice short entry at hand. So we will go through that on the chart here to give you examples and kind of talk you through how I would look to take these entries, which I have taken these entries many times, of course, but I'll kind of talk you through how to manage these trades. That way, when again, if you're going to take a trade using these conditions, you know how to enter and how to exit. And this is one of those nuggets of information that I like to highlight in a lot of my video series. This is a very important one, and it's talking about what extreme moves, essentially what I like to call extreme moves. So whenever you're taking your entry or you're looking for your entry, you always want to be aware of where price is in relation to the Kijun, because if it's too far away, right, which that's a bit objective, I guess you could say, like it's like kind of a it's an opinion. There's not necessarily a, if price is X amount % above, then you wouldn't take the trade. It's more about just looking at the chart, seeing what it looks like, and making a judgment call there. But if price is very far away from Kijun, when all 4 of your signals confirm, that also could signify that it's an overbought or oversold condition, depending upon, like, if you're looking for a long or short. So the very important part is if the optimal trade conditions confirm, but it comes after a significant movement, meaning you had a huge move to the upside or a huge move to the downside, those types of moves, you have to be very careful with entering a trade, because a lot of times when that happens, which I will show you examples of that here, the move could already have happened, essentially. And again, if you're very far away from Kijun, then that might say, hey, look, I have all 4 of my trade signals that I'm looking for, but we had a 20% move to the upside or downside. Like that's, I probably, like at that point, you have to wonder if you're chasing that trade. So in preparation for the live examples that we're going to do here just momentarily, just kind of want to talk to you about how I'm going to be going over those specific examples. So first of all, the entry is going to be when all 4 conditions are met. That's when we're going to take that trade immediately, or when you would take the trade. And then the exit, so this is a lot more complicated because there's multiple different options that we could choose from, which I will teach later on in the series. But for this, we're going to keep it super simple. Even though it might not end up being the optimal exit, right? So this is all about optimal entries. This might not be the optimal exit, but it's the simplest one that we're going to choose for, just because this is only the second video in this series. And that's getting a reversal TK cross. So if we're taking a long trade, which is mostly what we're going to be focusing on for this specific video, then you're going to wait for that bearish TK cross, and that will be the exit, and vice versa. So this is very critical, very important. Higher time frames always supersede lower time frames. I said this in the first video. For example, again, if a daily trend is bullish, I prefer to look for longs only, really. Like I don't like to take shorts using Ichimoku if there is a bullish daily trend until the daily trend reverses. So once the daily trend goes from bullish to bearish, then you will be looking for shorts. So for example, again, if we're using lower time frames, such as a 4-hour, if the daily time frame is bullish, but the 4-hour is signaling a short trade, I'm not a big fan of taking those short trades. They're definitely a lower hit rate that I found over time, and vice versa as well. So anyway, hopefully this is going to help out with the live examples that we will be going through right now. So here we have Bitcoin USD on the 4-hour time frame. And this is current price action, literally real time, because there's actually a setup that meets the criteria for this video. So I thought it'd be really interesting. And if you remember 4-hour, the 4-hour time frame is really the lowest that I prefer to go when it comes to trading Ichimoku. I just, typically when I'm trading this, I like to trade larger trends. So I stick to higher time frames. Now you can use Ichimoku on a 5-minute time frame if you really want to. I just don't necessarily prefer that. If we're range bound, for example, which Bitcoin has been range bound for quite a while now, typically, trading the lower time frames just produces a lot more noise. And I have other trading methods that I like to use, support resistance, that other type of stuff that obviously I have videos for. But in this instance, for the purpose of this video, going over the optimal trade entry, you actually have one. And the 4 things that we need, of course, price needs to be above cloud, which it currently is. The second thing you need is you need a bullish TK cross, which we have. Okay. And now there is a bit of a note. You do have a C clamp here, which basically it's signaling that price, like that it's a bit overbought at the moment. Because again, you have this really big divergence between where price is and where your Kijun is. Again, your TKs, so basically your Tenkin and your Kijun, there's a lot of distance in between here. But there is another setup on a daily time frame, which higher time frames always supersede lower time frames. That if Bitcoin closes anything like this over the next 3 hours, that it's actually going to activate that trade, which I put a bit more weight on that trade, if I'm being honest. So anyway, you do have a setup here, so I want to go over it. So again, number 1, price needs to be above cloud, which it is. Bullish TK cross, already talked to you about the potential issue here. Number 3 is you just got a bullish Kumo twist, so now cloud is bullish. Again, this is forecasted out too, right? But cloud just flipped bullish. And then the 4th thing is that Chiku span is above price. So here's your Chiku span here, or your lagging span. It's above price. Here's price, right? Clearly above price, and it's above cloud. So you have all 4 you have all four criteria to take a long entry. Now, where would that long entry come in at? You want to go through a replay just to get it as precise as possible. Okay, so we're just going to back up a little bit, because here, did we have all the criteria to take the trade? No, we didn't. Chico span was above price and cloud. Price was above cloud. You obviously had your bullish TK cross, but you do not have number 4. So you don't, the cloud is still very much bearish. So we're going to play it forward just a little bit. Not going to take very long, obviously. So cloud's very thin, and then you get your actual cross here. So as soon as this candle, which you can look at the bottom here and see the date, as soon as that candle, which was today at 5 a.m. my time, as soon as this candle closes and confirms, you would take that, you would take a long entry. So then it exits because you're basically there. So it's here, it's this red candle. As soon as this candle closed and opened, that's when you would take your long. So I'm basically going to put a horizontal there, just showing you where your long entry would be. And at the moment, you're basically break even, maybe slightly in profit. But really, for the purpose of this video again, and this is something that maybe we can revisit in a different video, your exit. Now, there's numerous ways to play this, and I'm not going to spend time on this video doing that, just because it would drastically prolong the video. And there's actually going to be multiple types of exits that I will do individually throughout this module. So we're going to keep it real simple again, and just looking for a bearish TK cross. So this is obviously not going to happen anytime soon, more than likely. So this is, again, just wanted to show you where your entry would be. You have all 4 confluences working for you for the time being on the 4-hour time frame, and you're ready to go. So this is literally the entry. Again, this isn't financial advice or anything if you're watching this video and you happen to watch it anytime soon. Just to be very clear, this is for educational purposes only. So let's go back. So again, you have your entry. Your entry literally just triggered and nothing's really happened yet. So now I'm going to go through and walk you through some historical examples so that you can get an idea on how to use Ichimoku in the fashion. Again, we just literally took an entry here. I want to show you where you could have gotten entries, where you likely would have exited, and kind of like talk you through that process a bit more. So here we are, Bitcoin USD, still on the 4-hour time frame. And if you recognize this, so this is the 2017 run-up. I'm going to show you, so like this is what I'm obviously really interested in. How do you get into trades and capture as much of this price action as possible, right? So like it's massive trends like this that, you know, using Ichimoku, how do you capture as much of this value as possible? You're almost never, like, you're never going to catch the bottom. You're never going to catch the top. You never, ever will do that with Ichimoku, I promise you. But you can capture, if you can just capture 70% of the trend, 70% of a move like this, that is way more than enough. And I think, I mean, obviously for myself, I'd be very happy about that. But that, you know, there's plenty of meat on the bone there to, you know, capture as much of this as you can. So this is, it's kind of like trend stuff like this that I want to focus on, because again, I think like this is where Ichimoku is very powerful. And I think it helps remove a bit of the emotion if you let it. Now, some people still cut trades early. I've cut trades early. I've done it. But if you like, Ichimoku is great for traders who need rules, like who need steadfast rules that they need to abide by, right? To help get rid of some of that emotion. I think this is one of those trading tools that you can use that's going to help with that, because there's a lot of rules in Ichimoku. Obviously, as far as stop losses go, trailing stops, you know, that type of stuff. There's other methods that I haven't gone over yet that I will later on in the module. But again, for this instance, we're just going to use TK crosses, as simple as possible. Now, is that how I would do it? Maybe not necessarily. There's probably other ways that like could protect your capital a little bit better. But again, just to keep it as simple as possible, we're going to just take a look at this area here. Like how, like where would you have entered using the optimal trade entry that I'm discussing? Where would you exit? Where would you look to re-enter, et cetera, to kind of like talk you through this. So start here. We zoom in here around the bottom. And obviously price is above cloud here. So this is naturally where we're going to start. I'm going to zoom in a little bit here. So let's pull up the replay tool. You can kind of see where you're getting your bullish TK cross here. So this is probably where I'm going to start, because I want to see if there's any other, like, where do the rest of the criteria fall in place? Like, we're going to find our entry. So starting here, and this is going to kind of go a bit fast. So there, you're already in. You are already in this trade. And it was on this candle. So it's basically right on this candle open. So 4 things again. Price is above cloud, clearly. Bullish TK cross for a long entry. Bullish Kumo twist. It's right here, where you see the green line, that single span A is bullishly crossing single span B. So you have your bullish Kumo twist here. And then Chigu span is above cloud and above price, right? So this is literally your entry, right, where we stopped. So what we can do is put a horizontal line here that just shows you you're literally buying right here. Now price is a bit far away from Kijun, but it's a little bit far away, but not that alarming. Again, this is really, like, this looks like a pretty good trend. You obviously have a big bullish Kumo breakout here. So you really wouldn't want to see, so like in this instance, just to give you an idea, what I wouldn't want to see is price starting to trade back inside cloud. That wouldn't be a good thing. As long as price is above cloud, especially because your Kijun is basically sitting right here, that to me would be okay. So let's fast forward and see what happens. So again, we're either, like, to keep it as simple as possible, again, the only way that we're going to exit this trade is if you get a bearish TK cross. So if your blue Tenkin here bearishly crosses your yellow Kijun and confirms, you're out of that trade. So that's when you will exit. So let's fast forward. Kind of coming over a little bit before our entry there or below. This looks pretty good for the time being. Obviously, your Tenkin and your, let me close this. Your Tenkin and your Kijun are in no real danger of crossing. Starting to get a bit close together. Getting real close. Now, so this, again, is what you want to see. You see how your Kijun, very steep angulation to the upside here. What we want to see is you want to see that angulation for both your Tenkin and your Kijun together and along. You can also pay attention to your cloud. When everything is angled sharply to the upside in this case, again, that's what we want, right? That's very, very bullish when you see that. So there you go. So that was a perfect example. If you went back one, you can see even here, still you can see that obviously. Again, I have forecasting dots on mine, so it's a little bit helpful to know approximately where your Tenkin and your Kijun are going. But if you look at this setup here, this is very bullish. So your Tenkin, look at that angulation, very steep to the upside. That's bullish. Look at your Kijun. You have that positive slope, right? Positive, that angulation to the upside, that's bullish. Look at your cloud. This is very bullish. So price continues, and you're obviously, you're pretty far away from your entry at this point, but you're just riding a trend. Which I want to point out here, you actually had a nice Kijun touch here. So this is price coming back to equilibrium, showing support here, and then you're getting a really nice reaction off of that. This is going to be a completely separate video as well, but if you missed this entry, this can also be an entry or a compound. So like if you wanted to add to your trade, this is a very good area to look at considering doing so. So keep going, getting another big break. Just gonna pause again, look at that angulation, very strong move to the upside. Look at your cloud, okay? Look at that steep angulation to the upside. Look at the steep angulation on your Tenkin and your Kijun. That's very, very bullish. And obviously price is at a little bit over $5,400. You literally entered at 4K. So this is an excellent trade so far. So this section here, something that I'll go over real quick, when your Tenkin and your Kijun are flat like that, that's signaling that you have a loss of bullish momentum. Okay, so you have this nice range that's developing here. So for those of you range traders, on lower time frames, this is a very nice range. You can deploy your range trading tools here if you want. But again, when you have flat Tenkin, flat Kumo, just telling you, hey, you know, bullish momentum isn't here as it sits. And what you want to see yet again, you want to see the angulation continue on your Tenkin and your Kijun to signify, hey, like we are looking to continue higher. So here, I'm going to pause it. One thing that's a bit concerning, or not a bit, I mean, it's not that it's concerning, you're like way above your entry, is this. So this is, again, kind of here too. This is a C-clamp, where your Tenkin is your Kijun are very far away from each other, which basically signals that this is a bit overbought. So that's something to be concerned about. When you see this, a lot of times you are waiting for that potential test of Kijun again to bring it back to equilibrium. Right now, this looks like it's going to continue higher, but you do have that C-clamp here, so this is something to be careful of. And again, like if you missed any of these entries, when you see a nice trend like this and it comes, if it does come back down to this Kijun, that again is like usually an opportunity. Get rid of that. Let's keep going. And there you go. I honestly didn't remember that I did this, by the way. But there is your Kijun test, which also happens to bounce off of your cloud. So again, when you have the C-clamp, what that's telling you is that, hey, like be cautious of a potential pullback, looking for that Kijun test. And again, that's usually another opportunity. If you missed this or you want to add on to your trade again, because you think the trend overall is going to continue, this is a good spot to do it. And there you go. So you saw the angulation again, everything's starting to move higher to the upside. That's a good sign. So one test here, one test here. Both Kijun tests were very excellent opportunities, I would say. Another test right there. So this, I don't know, I don't remember exactly what happens around here, but this, when I see this, it's a little concerning. You got your test, got the reaction you want to see. When you start to hover around here, it's not the end of the world, but typically in strong trends, when price comes back to your Kijun, you really just want to see, it push off of that. Tenkin Kijun getting close together. Still no exit. Okay. You can see here, getting close together. If you look at the forecasting dots, it looks like it could potentially, it needs to bounce here, could potentially cross to take you out of your trade. Curious, does this cross? This did cross here. Yeah, it did cross here. So if you're being real strict about it, this is your exit. Let me make sure. So your Tenkin is at 57.09, your Kijun, yes. So you did have a bearish take across here. Your exit would be right here. Now, this is like the thing about this, and why I say if you did end up exiting here, now we're going to be real strict and not play around, because obviously we know it goes higher overall, right? But you have already a bullish TK recross above cloud that's taking place. So like when you see this, it's like, okay, like I'm going to jump back into this trade more than likely. But what we have here, so again, and Tenkin, or I'm sorry, Two-span is actually sitting in price. But anyway, so this is your exit, 57.81. Let's look at this. Do you think you did good? I'd say so. Starting from the bottom here to your exit, that's a 42% move. this is, I mean, obviously depends on what size you trade with in relationship to, like, I mean, everybody has different standards, but a 42% move, if you're trading with a fairly large amount of capital like this, and this isn't even leverage, by the way, this is just trading, this is trading without leverage. 40% is a huge, like, that's a big deal, and it came within a relatively short amount of time. I mean, a very short amount of time. I think it was right here, right? So, like, we can actually draw this. I'm curious how long this took. I believe it was this right here, all the way to about here. So a month. So you were in this long trade for a month, and your exit 42%. That's not bad. So also, for those of you who like swing trading, it's a great example of a nice swing trade. You literally take your entry, you set your alert. So, like, again, you can set your alert on here to tell you if this is going to bearishly cross. So, like, you can add your, well, I mean, this can be different, but you can literally add an alert on your indicator to alert you when you get that cross. So you can exit your trade. But 30 days, you literally come in, spot an entry, get in your entry, and a month later you finally exit, right? You don't have to do anything else in between if you don't want to. Me, too boring for me. I like to trade. I like to actively trade, but these are nice swing trade opportunities for sure. And then in between, you can be taking scalp trades here and there if that's your thing. But anyway, so that was your exit. 40-something% gain, not bad. So we're going to delete our green lines, kind of talk you through again. Let's find another entry, which we don't currently have at the moment. I'm going to slow it down just a little bit because I have a feeling it might give you one. Okay, so it actually got you back in the trade, didn't it? Let me back up just a little bit, like I figured. And this is one of those setups that I just like. When you get a bullish TK recross above cloud, especially on higher time frames, so like 12-hour and above, those tend to be incredibly powerful long signals. Or if you get a bearish TK recross below cloud on those higher time frames, again, like, they tend to be very strong signals. Okay, so it's on this close here, yes. So where you have, so this would be your re-entry, which, funny enough, wasn't too far away from your exit, right? So you're not really losing a lot by exiting and locking in those profits. As soon as you took those profits, you literally guaranteed yourself a 40% gain. There's nothing wrong with that. And you're actually, the market's giving you an opportunity to get right back in. So that is your long entry. Well, just to be clear, back here, you had your bullish TK cross, which ended up being a bullish TK recross above cloud. So that's very good to see. Typically, cloud is obviously very bullish. Prices above cloud. I don't remember if I said that or not. And your Chiku span is above price and cloud. So you have all 4 optimal entries yet again here to get you back into that trade. Should have clarified that first. Speed it up just a little bit. Which, by the way, there, look at the angulation. Look at the angulation. Okay. Speed it up a little bit. It's going to take too long. So it's looking at the moment like you had another really good trade on your hands. Now here, another example though of a C-clamp. You have a huge space in between your Tenkan and your Kijun. Now obviously your Kijun looks like it's going to start angling to the upside, which is good. But you do have that potential there. Well, that's a big candle. Now, so it looks like we're getting close to a likely exit. Price is obviously in cloud. Again, there's going to be different methods. Maybe you, if price starts closing inside a cloud, maybe that's your exit. Who knows? Like, there's other ways to figure out like if you want to exit, but we're going to keep it the same way for this video. So do you have that confirmed cross? Now, no, they're technically the same. Now, this is not a great signal here. Like you probably would exit because you're going to get it. You're very likely going to get it, but your Tenkin and your Kijun are actually the exact same value, and they're angled pretty sharply to the downside. So maybe you would have exited. Slow it down just so I make sure I get the exact candle. Okay, so it was this previous candle. It was this candle here. Yeah, it was right at the start. Let me back it up. So that's the thing. Like in this instance, it didn't work out very well. The trade. Now, I mean, it was a profitable trade, but you obviously left quite a bit on the table. I just want to make sure I get the exact exit that you would have taken. This is a little slow. So here, so it's basically your Tenkin and Kijun were the same. It's going to be at the close of this candle, which is really unfortunate because it's basically going to be right here. So this is going to be your exit. So that's the thing for this setup. Now, again, I'm not going to cherry pick and say, oh, you could have done it. You know, now let's be real. There's probably better ways to look for exiting your trade. But at the end of the day, you still had a profitable trade. You left a lot on the table, though. And again, in future videos, if you're curious, some of the other methods that you could use to look at exiting, I can tell you that there's a lot of much earlier signals that would have got you out of this trade, but I want to keep it. I want to keep every example the exact same. That we understand that kind of again how we're like looking at this. So that's this example. Not a big win at all, but it's still a win, I guess. But yeah, you definitely did leave quite a bit on the table. So here you actually have this really big move down. Now, if you look at this candle, that's a pretty insane wick that you see here. So do you have a trade yet? Well, obviously right away, you can tell that cloud flips bearish. You see that little shade of red there. So this is flipping bearish, but your 2-span is still in price. So that's really the only thing missing that you have now. But this is a really significant move and a really significant reaction off of that low. So fading this could be questionable, I will say. This is kind of one of those examples of extreme moves that I talked about earlier that I would just be really careful is because you don't even have a short trade yet. And I'm not sure if it confirms or not. It looks like it probably will, but this is a very dangerous move to short just because obviously you're already off the high. You had this big wick up all the way down to low. That's already a 30% move in a relatively short amount of time. And you just had a very, like, this is a pretty bullish candle. Obviously, like, you know, price could come back down, maybe fill in some of this wick potentially, but this is a very strong push off of these lows. And another thing that's probably the most important thing, if you remember from earlier in the video when I talked about higher time frames superseding lower time frames. So for example, we're trading a 4-hour, right? Which is going to give you more signals than something like a daily. So, but what I prefer to do is if I am trading a 4-hour, I'm typically only looking for entries that err on the side of the higher time frame trend, right? I want to be trading with the overall trend. This technically, if you were to take this short, if this short does end up confirming, it will be going counter trend to the higher time frame trend, which again for me takes precedence. So if we were to switch this, just to show you, if I was to switch this to a daily chart, and let's say that we confirm anywhere around here, which by the way, are you too surprised about why you got the reaction that you did so far off of this? We were coming into the Kijun, right? So like this typically is a good opportunity to take a long trade. Or again, if you missed your previous entry or you're looking to compound, this is where you're doing it. So if we do indeed get a short signal here on the 4-hour from myself, that's not really something that I would look to take considering where the overall higher time frame trend and what that chart is telling me. So again, going back to the 4-hour. So let's see if we get anything here. So no, you can see how price is still okay there. So now price obviously pushing higher. You still have that bearish Kumo twist. Everything's correct as far as looking for a short, except for Chigu span still inside a cloud. But again, that's a very, very strong move off that low there. So you actually do have a short entry. You do have a short entry here. So I suppose I'm gonna mark it. You would literally be looking to short here. The problem I have with this is that if I am gonna take this trade, this is one of those instances where I don't think I put in the slide, but if I'm taking a trade after an extreme move down in the same direction already, okay, especially on like a really strong reaction off of that area, I'm probably going to be relatively quick to take profit. So in this instance, yeah, we're going to wait for that cross, but if price does come back down here, I am probably like, this is one of those instances where I would take profit early. And to be honest with you, I'm not even sure I would take this entry. Just because of this move, again, looking at this candle here, but for the sake of the video, you got to take the entry. But a reminder, this is a counter trend trade to the overall trend. We'll see what happens. Okay, so there you go right there. It's like I said, I would have taken some off down here. Now, we're not going to for the sake of this video because that's not the parameters that I set earlier on. But if you do come in to fill in this inefficiency, I mean, I guess like this is separate from the video. Again, like when you have a crazy long wick like this, it's not abnormal for price to actually come back through it again and trade some of these levels again. So it's not abnormal for that to happen. But this is one of those instances, again, especially after a really strong trend, I would have taken some profit off and likely moved my stop loss to entry at that point and called it good. But that's not what this video is about. So no more cheating. Because that's how I would have managed that trade, but see what happens. So here you have Tenkin and Kijun flattening out. So again, loss of bearish momentum. And cloud is pretty thin here. Chigu span's going back inside a cloud. So here you have, if you missed this short entry, which is at the moment is looking like a pretty good thing that you probably missed it. This is an opportune time, really. Like if you wanted to, you could take this. The problem that I'm seeing here is that your Chigu span, which you want to see below price and cloud, it's above cloud. So it's not even in cloud anymore. It's above cloud. So this is like a big warning sign. But again, like this, if you still think that this has the potential to roll over, this is not a terrible short entry. The only problem with that, again, Chigu span above cloud, that's an issue. And this candle closes inside a cloud too. So you have that change of behavior, right? Price is coming back in. It's more neutral than anything. So you're not technically, again, like price is not below cloud. But like as far as a scalp trade, could be a nice one. But this trade doesn't look like it's going very well so far. So there, you got a nice rejection off of your Kijun. So that's decent. So again, if you're looking to scalp this, or maybe this ends up being a really nice trade. So this high, you want to be careful. Like if it starts trading above that high, that would be really bad. So again, cloud holding as resistance now, not too bad. You really do want to see this start to roll over though. And you had, now obviously price is pretty close to your Kijun here, so you're close to equilibrium. But you did have that big C clamp that was starting to form here, but price already pushed up, but it is just showing you that. Basically already hit that target. That's bad. So when you see this, and that's obviously a very strong candle, it's going to close there. That's not good. Now you're obviously really far away from a bearish TK cross. But I'll tell you, if you took this short entry, this isn't looking very good. And Chigu span is back above cloud, so it doesn't look very good. Might end up working out though. Who knows? I don't remember what happened. This is worse. So now price is exiting cloud to the upside. And Chigu span was not, now it's all above price and cloud. So this is if you're still holding on to this trade, I don't know what to tell you, but this is not good. And it's looking like, you look at you look at this, the forecasting dots are telling you that there's very likely going to be a bullish recross, which is going to be the exit for this trade. So there it is. So there is a bullish recross. Again, cloud is flipping this. The funny part about this is actually confirming a long trade, but this was a really not like, this was a great example of a really bad short trade. I mean, 21% from here to here. It's obviously not a very good trade, but in my opinion, there were definitely a lot of warning signs that were kind of telling you that like the trade wasn't going to go your way. And again, this is going to be a bit of like, this was actually pretty nice insight to some of the future videos that's going to be coming in this module to help you gauge these types of situations. And like, just to be clear, trading just these crosses, that's why even on oscillators, on like EMAs, for example, if you just trade those crosses, a lot of times you will lose money. Like, now if you take every single one that ever exists, then potentially it might come out ahead. But like in this case, this shows you though that that wasn't a very good trade. There were a lot of warning signs beforehand that you could have paid attention to, that probably avoided a lot of this. Would have still ended up in a loss had you taken that trade, which again, it met all the criteria. But some of the things that I had mentioned earlier in the video, the previous slides, that's kind of an example of that, of like an extreme move. You have this big wick to the downside, and then obviously price coming down here and getting a response off of that. It's just showing you that there's quite a bit of support here, and that a reversal from here is possible, right? And we obviously got that. So now we're flipping to a long trade. You got everything here. You have a bullish Kumo twist, bullish TK cross, Chiku span above price and cloud, and price is above cloud. So we're going to move this up to here. So this is our long entry. Now, kind of the same thing that I will say about this trade. Obviously, this is a pretty big move, but price is a bit far away from where your Kijun is, so just something to keep in mind. See how this progresses. And there you go. So I mean, again, seeing your Kijun start to angle up, you want to see it angle up pretty sharp though. This is decent so far. So here you're getting that C clamp, right? Big divergence from your Tenkan and your Kijun. Let me speed this up a little bit. I don't want to make this video too long. So again, look at this huge gap between your Tenkan and your Kijun. So one of two things is going to happen, because you're always, this is one of those things that's guaranteed to happen in trading. And it's rare to say the word guaranteed, but at some point, price will come back to equilibrium. So you have one of two options here. Either price is going to come down to Kijun, or Kijun is going to come up to meet price. So one of those two things is going to happen that will put things back into equilibrium. Really good so far. See if you get showing you that you have potential angulation to the upside, starting to get pretty sharp. That's a good sign. There you go. It's working its way up. So price is coming up to meet, I'm sorry, Kijun is coming up to meet price so far. And there you go. So if you look again, look at your cloud. You had a long flat Kumo here that's starting to angle to the upside. Positive slope, angulation to the upside. That's good. This will probably be the last example, I'm guessing. This is probably taking a little while. But now, so here is something of interest that I want to point out. So when you had this disequilibrium, there was a very big gap between your Tenkan and your Kijun, and price and Kijun. What happened? Well, Kijun came up to meet price. Well, now price is actually gaining steam away. But what happened was this gap got closed. This is really bullish. This is what you want to see. Where you have your Tenkan and Kijun close together, both. Look at that angulation to the upside, right? Very steep slopes to the upside. Look at your cloud. Very steep angulation to the upside. This is very bullish. So let's see what happens. and now we're about to hit 10K. Just broke 10K actually. Boom, big move back down to Kijun. So again, this is one of those instances where if you missed your entry, or if you're looking to compound, now this is a very big move back to Kijun here, but this could be a nice opportunity. And if you look at where price is, I mean, your entry was at 7,400. So this is still not bad, but that was a big move down. Another Kijun test. So this is starting to potentially tell you that you could be exiting your trade soon. Potentially. Price is looking okay. Now again, look at your Tenkan and Kijun flattening out, just telling you that there's a loss of bullish momentum to the upside, right? Looks like it could be forming like a really big range here. But your Kijun did okay. Obviously had this dip below, but for the time being looks all right. Still way above your entry. There you go. Nice big spike up, angulation to the upside. To the upside, very good. Still in this one. Nice spike down to your Tenkan there. And the thing is, another reason, again, big spike up to the upside. Look how bullish that is. Very big. So just to show you, I mean, you are still in this trade. Look where your entry was, 74.12, and look where you're at. You're at basically 16K. I'm not even going to measure that yet. But look how long this kept you in the trade. Another Kijun spike down here. So same thing. Compounding opportunity or another entry if for some reason maybe you exited your trade. Who knows? But like this is another opportunity as far as I'm concerned. Now again, this is getting very this is a very big move up, of course. But that's another potential entry or compound there. And look at that. Again, pay attention to the slope. Very strong angulation to the upside. So that's a signal telling you, hey, this trend, although it's pretty extended at the moment, it's still, like this is telling you there's still potential legs left in this trend. Tenkan test there. So I'm going to speed this up just a little bit. Because it's going to take, this is already taking a while again. Same thing. Look at your slope. Now I know we're getting close. Was it 20K? So basically, so this was the top. But now coming below your Kijun, you look at it now. Like again, if your indicator has these dots or not, this is telling you that you're very likely to get that bearish cross soon. So like over the next, 4 to 5 candles. So that's something to pay attention to. Okay, now I'm going to slow it down just a little bit so that we make sure we get the exact exit. So right there. So you just had your bearish TK cross. Now, I mean, this thing can still move higher, of course, but if you look, Chikou span is below price. You have a bearish TK cross. This is a good signal to get out of this trade, which is what you just did. 16.9. So zooming out, there's your entry way down here at the bottom of the screen. You had 128% gain on that trade. So to go back, I think it was somewhere on this candle right here to your exit. Again, 128% gain. You were in this trade for 34 days. So another month-long trade. Another example of that. You get in, walk away. With three, I would argue three potential like compound opportunities here. So there was two pretty good ones, and this third one, you might have actually still made a little bit of money off of that compound, funny enough. But an excellent trade. So that short trade that took place prior to this obviously was really bad. There were pretty obvious signs, in my opinion, though, of like why to be cautious with that particular trade. But still, even if you take that bad trade into account, this trade certainly more than makes up for it, right? And then you had another really nice gain before that. But I mean, so this was in 2017. Obviously, we know that this was the 20K top for a while, and you had like this was the exit here as basically just shy of 17K that took you out of that trend. So I could keep going. I don't want to. I mean, I would love to. I could do this for hours, but this is gonna make this video extremely long. So maybe, you know, if people would like me to, I can do another part in more detail. But the thing that I really want to emphasize here, so we saw obviously a few examples of really good long entries that you had on this trend. So capturing, again, that was the point of this section that I want to do, is how do you capture most of this, right? So you look in one single trade, just abiding by a very simple set of rules, right? One trade, and you captured the majority of this. Did you capture the bottom? No. Did you capture the top? Like, did you exit the top perfectly? No, you're not going to, but you caught a very substantial portion of this move up. And that's all you're trying to do when it comes to Ichimoku. If you can capture this much of a trend, you're going to do pretty well more often than not. So that is really what we're focusing on. Now, obviously, again, like the optimal entries, that's the focus of this video going forward. I'm going to teach you other ways to manage your trade, other entries that you could take, and other, you know, again, the different ways to manage your trade, I think is very important, because you probably could have had even a bit more success. But in future videos, that's what we're going to go over. So hopefully this video was helpful. And we got a lot more coming in this module in later videos, of course. So with that being said, trade safe out there. We'll see you on the next one.